Hello and welcome back to Building Wealth on the Go, a podcast by KLT Wealth Management. Today is November 21st, 2023, believe it or not. We're back with Season 4, Episode 8 of our podcast. I'm your host, Brad Wilson, joined by my colleagues, Courtney Beach and Joe Filiameni. We've got lots to talk about, lots going on. The last month has been kind of crazy when you talk about the economy and markets, news, headlines, lots going on. So we're going to dive in a little bit into sort of everything that's been going on over the last little while. So to start off, let's jump in with what is making news. So, first news topic today. Actually, we just got this information minutes ago, really. The inflation numbers came in Canada at around expectations of 3.1% for October. So, inflation numbers were at 3.8 in September. So, it is down. We are moving back towards that target of that sort of 2% mark. So, what does this sort of mean for the economy, for where we are in a high interest rate environment? What does that sort of signal with these numbers today?
Well, I think it's a good indication that the higher interest rate situation that we're in is working, and it might be curving some of the demand that's out there. But I think we got a ways to go. I think we got a long ways to go because I think core inflation is still pretty high. The price of food, price of
Mhm.
housing. So it was interesting to note that they removed the gas, which is a big part of the inflation, and gas prices did go down. But at the same time, it's interesting that OPEC is getting together and has decided to reduce output. So what happens? It's supply and demand. So all of a sudden, if there's not as much supply, demand will go up and the prices are going to go back up at the pumps. So it's kind of crazy how they're kind of working things out this way.
Yeah. It's
Yeah.
really a wait and see game at this point. I think it does show that the Bank of Canada made the right move at their last decision to kind of hold off and see. But will that what will that translate in December when they make their next rate decision? I have no idea. Neither does anyone else, because a lot can happen between now and December, and you're going to have a lot of people spending for Christmas, which is going to change things.
Yeah, that's the interesting factors. We enter in sort of the month of November, right? This is a big
Mm-hmm.
consumerism month. Black Friday sales, I know, have kicked off this week. It's interesting, though, because I think companies are sort of, the deals don't look that great
Mm-hmm.
this year, the Black Friday deals. I think companies hiked their prices up the last 2 weeks just to cut them back down again this week. So I think it'll be interesting to really see what November numbers have. And I think there is a big decision at hand, December 6th. So it's not too far away, only a few weeks away until we get that sort of rate decision from the Bank of Canada. And likelihood is that they're going to continue to hold off for now just to see how we progress. The important thing to remember when we talk about these inflation numbers is they're a year over year figure, right? So this is 3.1% from October last year, right? So within that 12-month period. So we have to remember when we had those super high inflationary periods was actually kind of the spring summer of 2022. Now we're getting into the fall when they'd cut back a bit. So it's kind of seeing it level off and drop a little bit makes sense because of how much the interest rates have risen in that short period
Yeah,
of
and it's
time.
because of that long stretch of time when you're looking at the inflation. That's why the Bank of Canada is being so slow, and that's why they're making these pauses, because it's a lot to factor in.
Yeah, and I think the theme, it's still on theme in terms of higher for longer in terms of the interest rates. We're not getting the interest rates are not going down anytime soon, let's
Mhm.
face it. So I think they're going to kind of hold the interest rates and like I said, not necessarily increase them because maybe they don't need to increase them, which is good for everybody, I think. And ultimately just keep them at this level for a longer period of time until inflation does come down. But it's going to be a challenge for that inflation to come down on all sides.
Mm-hmm. Yeah, I do think there's a couple of camps of sort of analysts when they look at the rate projection, right? The forecast of rates. Some are predicting that you might see a gradual pullback in sort of rates next year. Some are anticipating will be higher for longer, and then the banks will proactively drop rates as quickly as they raise them, and pull them back, not to the level they were, obviously, but they will get them back to sort of a target level at a quicker rate, but maybe a year from now, right, or even further from that. So it's interesting. There are really those two camps and sort of what they predict will happen next year when it comes to those rate decisions.
And it's interesting to think about, like, because I think we're feeling recession is around us, right? I feel Canada is already in recession. Most of Europe's in recession. I think we're seeing a lot of the cracks in the general economy. We're starting to see job layoffs, like reductions and stuff. So that is, in essence, is what the central banks were wanting to happen, is to go into a light recession. Now, if we really slide heavily and quickly into recession, then you may see them, exactly what you said, Brad, is dropping interest rates. But it's going to be a fine line in terms of how much they need to drop by and how quickly. Again, we don't necessarily want to stimulate and have inflation crop up again.
Mm-hmm. Yeah, and that kind of leads us into sort of our second big headline, which is the tech giants really led this big rally in the markets here for November. In October, we kind of saw the markets plummet a little bit, dropped and bottomed towards the end of October to a low we hadn't seen since early 2023. And from that, we've seen a really, really strong rebound in the markets, led by the likes of Amazon and Nvidia, specifically up over 22% each in that time, in sort of the last 3 weeks. So it's been a big sort of rally, and a lot of it has been focused on the news we just sort of talked about, anticipation of soft growth, soft inflation numbers, which is why I think today you look at the markets at open today, markets are down, right? Generally we think, okay, well, the market, it hit expectations, that's great, it's good news, but I think this had already been predicted. Maybe some were anticipating it to even exceed expectations, it to be even better than expected. And so I think you're seeing the markets kind of react a little bit today with some softening. But that November rally was quite interesting, right? We've soared. This is, I think they said, the best 3 weeks since 2020 in the S&P 500. So quite fascinating on that front.
Yeah, it's that magnificent seven on the tech sector, right? We're not going to get move forward in the general economy without technology and stuff.
Mm-hmm.
And maybe technology is recession proof. That's a theory I'm thinking about, because, like, if you really think about it, technology replaces our jobs, makes our jobs easier. So, there's always going to be a need for technology. So if we have reduced staffing, or, lots of people working remotely because we're saving costs on, our facilities. So what do you need? You need technology, right? You need technology to put it all together, to match everything, to make everything work and continue in your business. So it's a theory I have here that the technology is recession proof.
I think I've heard it before that technology has become more of a staple. It's like a safe haven. Like, you're going to maybe reduce what you shop for at the store, but you're still going to go on Facebook. You're still going to go on Google. You're still going to use that stuff. And people are familiar with those companies. They know them. They feel comfortable with them. So, I think it's become more of a staple product.
And yeah, exactly. And you're going to shop. You're not going to shop in the store anymore,
No.
Courtney. You're going to actually
Amazon.
do it online. You're going to do your little app. Well, like even Walmart and all the big food stores, everything has an app to it. So, in my mind, it will move in towards, I'm just going to go online, order what I need, and go and pick it up or have it shipped to me. Because what's that going to do? It's going to avoid me wasting my time running around in the store finding stuff, and Impulse
Mm-hmm.
buying. I'm going to reduce impulse buying. All those things by the cash register, by the checkout that you grab, right? And you see something or something's on special and you really don't need it because you have five already at home, but you buy it anyways because it's on
Yeah.
special. So it's going to reduce that if we're more focused, and it's going to be just order, pick up,
Yeah.
done.
They are getting better at that though, Joe, because now you'll order and a screen will come up saying, "Thanks for your order. You have 5 minutes to add these items to your cart at a
Or
special
it'll
deal,"
come up with,
right? And that's the new
yeah,
impulse
or it'll come
buy.
up with things
Of
that you've got
course.
before. Do you want this?
Yeah,
You know.
yeah.
Well, it's
Yeah.
evolving. This is the thing. It's an evolving, process. They're
But I
not
have to
stupid.
say, you do the nice thing about ordering on an app from a cash flow perspective is you see the dollar figure that you're actually spending. Because when you go through the grocery
Yeah.
store, you have no idea how much you're paying at the till until you get there. Whereas when you use an app, you see exactly the dollar figure and you can adjust. Oh, maybe I can add a little here, or I got to take away there. So,
Hmm.
The one thing though is there's a lot of hidden fees with that sort of
mm,
online shopping, which we notice these days, right? It's the convenience factor. I think we fall into that, right? Paying, like, these companies got to make money, right? If you're ordering online, it's not the cheapest in the world for them to hire an employee to get them to walk around the
mm-hmm,
store for you, right? So there's lots of different sort of, and even the third party companies
mm-hmm,
as well, right? So there can be some added costs with that. But interesting when you mentioned sort of like being a consumer staple and a staple. Um, when we think of consumer staples, we don't think of 20% swings in their stock price within a 60-day period, which you look at like an Amazon, right, was down from mid-September to mid-October, down almost 20%, and then back up 20% 3 weeks
yeah,
later, right? So it's that volatility. I think from, like, when you think of technology as a, not necessarily as a specific company, but as just a necessity in today's society, yes, it's there. It's
mm-hmm,
a staple. It's here to stay. It's not going anywhere. Look at the evolution of AI. But I think from an individual company perspective, there's so many companies out there trying to make it. There's so many of these small startups. There's so much movement between the big companies and
mm-hmm,
swings that there's still a lot of volatility, and they're not afraid to
mm-hmm,
cut jobs. They are not afraid to cut jobs when they need to restructure. You're seeing right now Microsoft and OpenAI being the ones who created ChatGPT. Just the board just decided to cut the CEO. He then went to Microsoft and is now trying to pull all the OpenAI staff over to Microsoft, and they're thinking like they're now trying to get them to reverse the decision. Like, there's so much going on with these giants, and when you have a new AI stream coming into it, it adds a whole nother
mm-hmm.
dimension.
But at the same time, these companies, they're flashy, right? Like, these
Yeah.
companies, the antics of, this guy goes there and that go, we're going to cut jobs here and stuff. Whereas, the other staples, they're kind of boring. Like, you know what I mean? Like, that's the whole point of the
Yeah.
staples is they're boring, right? You hang on and they
Yeah.
keep doing their thing. But where these guys are different in the sense that they're flashy. You know them. They're the popular kids. Everyone wants to get in. Oh, I own Facebook. I own Alphabet. You know what I mean? So I would
Yeah.
agree with you, Brad. They are a little bit different than the rest of the staples.
I kind of equate it to saying that Bitcoin is the new
Yeah.
gold, right? That tech is the new consumer staples is like kind of saying
Yeah.
Bitcoin's the new gold, right? It's a volatile new asset, right? That's new, it's flashy, it's in your face, it's everyone's
Hmm.
talking about it, but really is it that staple? Is it gold? Is it an equivalent to
Yeah.
gold, right? So I think of it
And the
from
other
that
thing is,
standpoint that
will it
probably
last?
not.
Will it last being there, or will it peter off? Like, how
Yeah.
many tech companies have fallen off the wayside because someone else came up with something bigger and better? So
Yeah.
Mhm.
we'll have to wait and see.
Yep. So it'll be interesting to watch. I know today you're seeing a lot of kind of pullback from those big companies. All the big seven are down at market open today. I think led by Amazon's down about 2.5%. So will be interesting to sort of see how that plays out, and we'll get a bit more into sort of market discussions a little bit later. But our last sort of big news headline, just a continuation on global tensions. Lots of global headlines to kind of dive into. First one being the Israel Palestine conflict. When we filmed our last podcast, it had just started beginning of October. So here we are, sort of towards the end of November. Nothing, it's just escalated from that standpoint, unfortunately, and it's just created a real big tension over there, and it's kind of it's a big ripple effect throughout the world, right? With people picking sides, lots of disputes. You're seeing lots of protesting on both sides there, and that's causing a lot of disruption and a lot of sort of feud across the world and a lot of political tensions.
Yeah, most major cities, or a lot of major cities, are having protests, and it's creating some turmoil in a variety of different countries, and so that has an impact there as well. So, but what lasting effect it will have, we don't know, and will it create any change? We don't know that either.
But it almost seems like the markets have been resilient to a
Oh,
lot of this thing. Like, look at the Ukraine and Russia that's been going on and stuff. So it
For
really
years.
hasn't, yeah, it hasn't really impacted the markets. We seem to be on this optimistic flight in the
Hmm.
markets that we can do no wrong. And
Yeah.
a lot of these political situations and stuff are really not impacting the markets at this point. And maybe something big is going to come down the pipeline that's actually going to change the market's attitude. So it's going to be interesting
yeah,
to
it's almost
watch.
like the markets and investors have detached themselves from it. They're not associating
Yeah.
how these companies might be affected by these wars and conflicts, at least at this point.
Hmm.
Hmm.
It has been interesting, and I know there's been lots of calls for ceasefire and for sort of peace negotiations and whatnot, in sort of that conflict, but it doesn't look like there's anything in sight. I know, even I think Joe Biden was meeting with the Israeli government recently as well, but yeah, so it's just unknown at this point, and the escalations just it's continues to be unfortunate that the escalation just means more casualties, right? At the end of the day, and it's just
Yeah. And I
continues to
think if
put
there is a
more and more
change,
pressure.
or a country does change their mind and requests a ceasefire that hasn't, it's going to be sudden. I don't think it's going to be a lot of
Mhm.
lead up because there's so much pressure. Eventually, yeah, we'll see.
Yeah. So unfortunately, that's just another wait and see situation. Another big one, really recent news: big new political regime shift
Mhm.
in Argentina. A big far right sort of outsider was just recently won the election, coming in with very strong ideologies, strong shift. Now Argentina's not really a big economic powerhouse from the standpoint of affecting world markets, world economy, but it is somewhat of a trend of, you've seen some countries with political instability or status quo for a while that have come through with it. Even, I know we chatted last year, at the end of last year, with Italy, right, having that sort of new, they had the election, and they'd said it was like the new Mussolini coming in,
Right.
right?
Mussolini, yeah, exactly.
So you're kind of seeing a few of these countries now with these really far, and Italy I think being a little bit bigger than Argentina sort of with its impact, but again, will be interesting to see how that sort of plays out in South America. How does that ripple effect fall through? Is there any political fallout? Because I think a lot of people there are expecting big changes from this new
Yeah, just
regime.
to clarify, this new government is more of a libertarian government. We do have the libertarian party here in Canada, but they've never really gotten an elected official that I can recall. Basically, it means
Mhm.
that the government has little to no interference in your life. So we have all these ministries
Mhm.
that take care of our education and our health, and in a purely libertarian government, that would be privatized. Everything's privatized. If you need anything, you're on your own, kind of thing. But then you have the less government interfering in your life as well. So it's a tough.
The big one is looking to abolish the
Mm-hmm.
central bank, right? That's one of the big policy changes, and potential to adopt
Yeah,
the
get
US
rid of the
dollar as
peso.
the currency as well. So those are two of the big
Mm.
sort of changes that he's kind of
Mm-hmm.
running with, is completely demolishing their central bank and moving to the US dollar, which is not new. There's countries that have talked about it before, but to see if this actually goes through would be really fascinating. And then what impact does that have on the
Mm-hmm.
US dollar, right? Does that add strength to the US dollar? How does that affect us in Canada, right? If the US dollar strengthens on something like that, does that really even push our dollar even further. It's pretty bad right now at almost $1.40 on the exchange rate. But how does that sort of factor in? And then global trade, obviously, there's lots of factors with that, and or does it go the other way, and does it cause a negative on the
Yeah.
currency?
That said, any of these changes are major changes and it can't happen overnight.
Mm-hmm.
He's going to have to implement
For
a
sure.
lot of different things and get it pushed through his government in order to get them to go through. So, well, again, another wait and see. Sorry.
Mm-hmm.
Mhm.
Yeah. So we'll move on to housing. I think it's always important to sort of touch on housing, especially here in Canada, where you look at housing as for a lot of people is their largest asset, right? When we're talking about housing, especially with today's prices, CMHC just came out with a study that shows the average home price is 141% higher than the median earning family can afford, just showing the sort of lack of affordability in this market. And we're continuing to see rent prices are pretty strong still. Even those prices are difficult when it comes to affordability. And so, what does this sort of mean? We're getting these studies out. Obviously, it's not really surprising news to get this thing. We all knew the housing market was extremely expensive and unaffordable for most. But what does sort of this mean in terms of, are we going to see further action? How will this impact pricing? Where do we kind of stand
Yeah,
there?
well, I just read an article this morning or yesterday saying that the federal housing minister is considering measures to curb short-term rentals like Airbnb, all these
Yeah.
ghost hotels in the
Mm-hmm.
major cities that have 50% capacity, like they're not being used. So
Yeah.
there was no word as to what they were going to do, whether he was thinking about taxing or new rules and regulations to having one. We've seen cities in other places, especially in the States, where they've made rules to curb Airbnbs or even get rid of Airbnbs altogether. Um, but I think at this point they're just sort of floating the idea out there to see what people think before they actually take action and implement something.
I think like our housing situation is a mess in
Mm-hmm.
Ontario, in Canada. It's just terrible. I think we're going to end up with a whole generation of renters because it's just not
No.
affordable to with the interest rates higher and the values of the houses just crazy. So I'm not sure what the government, you know, they've got all these
Mm-hmm.
incentives. The Ontario government indicated like any new builds for rentals, they will refund all the PST, part of the HST, on a rebuild. So then there's incentives to build these rental properties. But here on the other end, there's no control feature for rent
Mm-hmm.
control. And so they're encouraging landlords to build and have rental properties, but the properties are still unaffordable on the rental side.
Mm-hmm.
So does that make sense? So all of a sudden, that person, that couple, that they can't afford a house currently because they're trying to save for a down payment. They need to get that down payment. Then at the same time, they're renting, and all of a sudden, the rent goes up 20% because there's no control because it's a
Mm-hmm.
new build.
Mm-hmm.
So does that really make sense? So I'm not too sure why the government's heading in that direction. I know the idea is to have more housing. The idea again falls into the supply and demand. If there's more builds, there's more availability, price will go down. But that's not happening. So something
Mm-hmm.
else has got to happen. They got to change
Mm-hmm.
this.
Well,
And I think, Courtney, just to your point there about the short term rentals, it's more lucrative for somebody to rent out their house for 4 weekends, 3 nights, $250 a night. You're pulling in
mm-hmm.
$3,500, right,
Mm-hmm.
for the month. So, or $3,000 for the month. So, like, that's the more than maybe you'd rent out an apartment for, or even a bedroom. You can rent out your
Yep.
bedroom, right? So, like, there's people that are gonna lean towards that, short-term rental versus having somebody in full-time. They've got more recourse on a lot of these Airbnbs with the insurance and whatnot. There's a little bit more control, a sense of control. So I think the lucrative market of having sort of a short-term rental, yes, you have to manage it a bit more, but there is some you know, there's stuff like drawing you in a little bit more
Yeah.
to, I think, short-term rentals versus
Yeah, and
longer
I
term.
think that's the root of the problem is that I don't know how long ago, but people stopped looking at houses as shelter and started looking at their houses as an investment. They started renovating their houses. You know, how many flipping shows have we had? Are there out there, you know, so that people can make a buck? People started renting them out. People started buying up properties so they can have long term and short term renters, you know, and I think the only way we can change, or one of the major ways to change the housing market, is to somehow change the way people view houses and stop looking at them as this investment and start looking at them as houses. And you know, it's starting to change because you know, a lot of people would buy their house and then they'd sell it when they get to retirement, and that would become part of their retirement pool of money to spend. But it's getting to the point now that retirees are selling their houses to downsize, and the difference in price is just not there to support the retirement. So it is
Mm-hmm.
not the investment it used to be, unless you're somebody who already has property. If you're from somebody who already has the rentals and stuff like that, then you're getting the income. But you know, for to make that change or to get the the investment back now it's harder. It's a lot harder.
Well, do you really think it's fair that the government intervenes with my business plan to have an Airbnb? Again, it goes to that libertarian, philosophy. Like, okay, that's my business
Mm-hmm.
plan. I've made some investments, or I've renovated, like and put up an apartment in my house, and I'm
Mm-hmm.
Airbnbing it. And to Brad's point, I'm making a bit more money. I have much more control who's in and who's out. There's more turnover, which is good for me, as opposed to getting stuck in a rental situation where the landlord has no rights, and
Mm-hmm.
it's all the tenant. So
Yeah.
all of a sudden, government is stepping on toes on business plans, and what's that going to do? You know, I'll probably sell the place, like, or get out of it. Will I actually rent it out at some point in time? Maybe not. So I'm not too sure whether that's the right
And I think that's
strategy, is
why
for
they're
them to
just
kind of
floating
focus
the
on.
ideas out there now that they're going to curb it, because they want to see the reaction of Airbnb owners and other people, stakeholders in this, before
Yeah.
they.
But you know where we're going to feel that? We're going to feel that in the hotel uh, areas. Like, try to find a hotel in Toronto under 300 or 400 bucks. It's
Mm-hmm.
crazy. And so the Airbnbs, fit a specific
Mm-hmm.
market that came in a little underpriced. They're a little bit larger. You can get like 6 people into an Airbnb in a condo as opposed to a hotel room. So then all of a sudden, hotel rooms will continue to go up. And again, it's going to drive that price of traveling, of vacationing. The prices of all that is going to go up.
I don't think, I don't want to be a downer on this situation, but I don't think, even if the government does restrict short-term rental, I don't think it's going to make a difference. We have such a supply issue that, okay, the sale of, X amount of homes, we still have a large population of immigration coming, people immigrating to this country. We, although birth rates are low, we're still like, there's the turnovers there, and people are living longer, they're staying in their homes longer. People don't want to go into retirement homes, they're staying in those homes that are $1 million homes, $1 million plus homes, those big homes. So you're having sort of this gap, and I honestly think the supply boom will come when all the baby boomers are no longer here, right? There's going to be that supply boom or transition of wealth at that stage of all these big assets that, they didn't want to leave their house, or was left in the family. And that might be the way that this generation you're talking about, Joe, that can't afford gets homes, is by
Yeah,
inheriting them,
intergenerational
right?
wealth. I think that's who's going to get the
Yeah.
Yeah.
houses.
Well, the other part of that is maybe we got to tighten immigration. Maybe we got to close the door a little bit and stuff, because again, that's creating the big demand. And if we can't keep up with the supply quick enough, maybe we gotta limit. And that might be a discussion for another day.
Yes, that's a
Yeah.
little different.
Yeah. Well, as I said, housing's always a good topic to sort of touch on every month. So we'll be back, obviously, with more to discuss, as it is really a big hot button issue in this country every day. So let's move on. Market outlooks. We touched on sort of the market rally recently. So what are sort of expectations as we move forward? We've talked about expecting sort of weakness in the markets. We talked about that last podcast. We saw weakness followed by this big rally. But I think the big thing we've sort of discussed is that disconnect between, like you mentioned earlier, Joe, the big seven and a lot of different asset classes and different market cap size of companies, right? You look at mid and small cap, generally when we're in a big rally coming out of sort of a bear market, it's led by those smaller caps, those mid cap stocks. They forge forward in those times, and we're not really seeing that. We're just seeing the big names drag everyone else along.
Yeah, it's going to be interesting because there's a seasonal aspect that's coming up too. It's usually our market, our Christmas market, right? So our rally typically around the Christmas time, and so we may continue to see sort of that direction up, albeit not broad based. Again, the small and medium companies are not really doing much, maybe even going in reverse, and we'll end the year still positive, which is great for everybody when they're looking at their investment statements at year end. That's always nice to see. But then, how does that bode for January? Which then comes to the realization of, okay, we are in recession here, and small and mid caps are not doing anything. Maybe the valuations on those large cap tech stocks is way out of whack, and we need to come to that realization. So it's going to be interesting to watch.
Yeah, we will keep sort of our finger on the pulse, so to speak, with that. It is going to be interesting to watch. I definitely think we are in for a bit of a volatile finish to this year. We've seen it in the last month. Like I said, major swings within the last 30 days, 30, 45 days in the market. So likely more of that to come as we sort of figure out where are valuations, where is inflation, where are growth numbers, what are layoffs looking like into the Christmas and holiday season. And generally, like a week, we're heading into U.S. Thanksgiving this week as well. So that's another sort of holiday period in time that sometimes you see a bit of a holiday spree as well at. So we'll keep an eye on sort of all that as we progress. So that brings us to concluding this podcast with Joe's financial planning tip of the month. So Joe, what do you have for us this month?
Well, trying to be on theme here with housing, I'd like to talk a little bit about the first home buyers savings plan. So we've heard a lot about it. Finally, a lot of the banks and whatnot and the financial institutions have got the structure in place to open these up, and it's something to consider if you're a first-time home buyer. Very, very relatively simple plan. You open it up, you put some dollars in there. There is a maximum amount per year. I believe it's $8,000. And it kind of works like an RSP because you get a tax deduction for that contribution on your income tax return. So you'll see immediate results, especially if your income is high. You'll see immediate results on a nice tax refund. And if you plan it correctly, do it before the end of the year, for example, you'll see that in April of next year. So within the plan itself, you'll invest those dollars in the various vehicles that are out there. And then when it's time to take the money out for that first time house, then you're able to pull it out without penalty. And you don't have to repay that money back into the plan, which is the old home buyers plan, which is still out there. You can still pull money from your RSPs, from the home buyers plan, but you have to pay that one back. Whereas this one, you don't. So I'm not too sure I like that idea, because again, I kind of like the idea of still forced savings, but it is difficult to force savings when you've bought a house and you're sitting with a $500,000 mortgage. But it certainly is a consideration for those that have TFSAs. You can maybe move money from the TFSAs into the first home buyer saving plan. That might be a strategy for you. So it's something to certainly look at. Talk to your financial planner, talk to your advisor, get some information about the situation and see if it's working. It would work for you in particular.
Awesome. Thanks, Joe, for that. Yes, and we will be back with one more holiday episode in December before we close out 2023. Believe it or not, we're going to close out 2023 here before we know it. So one final podcast before the year end. But thank you so much for listening, watching, wherever you are. Make sure to subscribe on whatever platform you're on, and leave us a review if you're on any listening platform. A 5-star review goes a long way. So thanks for listening. We'll see you next month.